China has taken more steps to stabilize the markets and shore up the economy. On Wednesday, the Shanghai and Shenzhen stock exchanges closed down again for a fifth straight day. The benchmark Shanghai Composite dropped by more than 1%. The Shenzhen dropped nearly 3%, and Hong Kong's Hang Seng closed down 1.5%. CCTV's Roee Ruttenberg has been following the story, watching the markets. Roee, China lowered interest rates on Tuesday, now another day of actions.
That's right, Asiye, and it appears that these are all steps which are intended to stimulate the economy and alleviate some of the panic that we've been seeing in recent days. The government wants to get the money flowing, it wants to keep people spending and the banks lending, and Wednesday's moves were the latest example of that. Among the steps the government said it was taking, cutting red tape in China's financial leasing sector, and the waiving of certain banking requirements like minimums on registered capital. That doesn't affect financial firms only. Companies which lease things like ships, planes, farm equipment, and medical supplies, in theory, will be able to register their businesses more easily and import and export goods more simply. Authorities also said they'll create more financial leasing firms to deal with the uptick in demand. In a separate action, the country's central bank said it would pump an additional 140 billion yuan, roughly $22 billion, into the financial system. Another move to promote economic activity, analysts say, to help ensure China stays on track to meet its 7% growth target this year. But the moves failed to calm China's jittery markets.
The stocks have run out of money. No one is in the mood to buy anything. The impact of this should be quite big.
The announcements made online offset some of the day's losses, but only briefly.
We saw on Wednesday morning a pretty big rally on the Shanghai stock market, but many investors then sold their positions just before the close. So at the end of the day, it did not rise. This shows that, in the short term, investors are still pretty nervous.
Chinese authorities also continued cracking down on what they say is unlawful market practices. State news agency Xinhua says police are investigating China's largest brokerage, CITIC Securities, for illegal trading. 4 other top firms announced they too were under investigation. Well, meanwhile, a commentary in Xinhua, which is closely aligned with the central government, said Beijing has more policy tools to keep the economy on track. That includes a massive surplus and nearly $4 trillion in foreign currency reserves. The commentary adds the optimists just need more time to prove that they're right. Asiye?
Roy, you mentioned the crackdown there. Some investors have now been frozen out?
Yeah, more than 150 of them. They're being punished by the China Financial Futures Exchange for what it says is abnormal behavior. And they have to sit it out now for more than 1 month. The exchange says it's closely watching clients and will, quote, detect and deal in a timely manner with any abnormal market moves.
Roee Ruttenberg, thank you.